Hey everyone, this is June from Turning Point Life Investment, and this is your market analysis for June 26, 2010. Okay, I'm going to start with the weekly view first. Now, going into the weekly view, you see we produced a rather large dark candlestick engulfing the last week's prior price action. So you can say that this is a bearish engulfing pattern. And I also mentioned that we could be forming a head and shoulders, which right now has that type of look where we have the left shoulder here, the left shoulder here, the head, and then the right shoulder. So look wise, we have that head and shoulders look. The main thing that we still need to wait for is a break of this neckline, which is around 105, 104, give or take. So very similar to what we saw here back in '07, the top in '07, where we have the similar head and shoulders look. You can see how prices rallied 2 weeks to form this right shoulder, and a bearish engulfing pattern formed as a result. So very similar. We saw 2 weeks of rally and then a bearish engulfing pattern. Um, so it's always amazing to see how price patterns repeat themselves almost to the T. Okay, so going into the daily view, we pretty much had about 4 straight days of decline. And usually when you get a market or a stock for that matter have like 3 to 5 straight continuous moves, that usually leads to a short-term oversold, overbought. In this case, since we have 4 straight days of decline, the market's a little bit oversold on a short-term level. On Friday, it produced somewhat of a small body candlestick, so that tells us the market is ready to kind of consolidate a bit. You can see, again, short-term we're a little bit oversold. I'm going into an hourly view. So I expect a little bit more of consolidation coming into early next week, maybe for a couple of days or so. But here you can see we have a mini head and shoulders that's forming, inverse head and shoulders, I should say, on an hourly view. So you have the left, the head, and then the right shoulder. If we get a break above here, then there's a good chance we might come back and hit 110, simply taking from the height, which is 107 to 108 and a half. So it's a 1.5 point height. Add that, and that's how you get a target of 110. So that's a possibility right there. If we break above it, there's a good target of 110 for this pullback, for this slight relief rally. But overall, it looks like the market is ready to head lower. But currently, it's holding on to this gap area support. So once this gap support, or at least 107, breaks, then you know the market's it's ready to start another push impulse leg lower.